traders from across the globe, and welcome to the 1257th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. These videos are being brought to you nightly to help teach you the art of technical analysis. This video being filmed on Sunday night for Trading Sunday, Monday's trading session. That would be December 15th, 2014. As we know, futures trading can be extremely risky. It can cause substantial financial loss. Is not suitable for all trading accounts. Traders, what you are about to see is obviously the opinion of a 33-year veteran analyst trader. Lived my life down on the trading floors, back on the trading desks, and have been showing you my OMNI in, I guess I should say in public, since 2006. For you traders that understand what's going on out there, you should follow the OMNI. Very, very interesting video this evening coming your way. Let's discuss what's on the board. Traders, it's no secret that the crude oil is the hot topic of the day, the week, the month. It is the flavor of Wall Street right now. The whole world is talking about it. So being that crude oil is the hot topic, there's plenty of pundits out there calling for this price, that price, and the other price. Please remember this. Always qualify who you're getting your advice from before accepting it. Here's what I mean. One thing we do know about the OMNI is this. On television live for the world to see, on Melissa Francis's show on Fox Television, OMNI gave me a great call to offer to the public. Markets were trading in crude oil, which is what this is all about. In crude oil, market was trading at 103. I made a projection based on my charts and the fundamental picture, but mostly charts, that the crude oil would start to head down to 65, if not 45, by mid-2015. This was on television sometime beginning of the year. It got all the way down to 56 this year so far from 103. That's a tremendous call, but I'm just trying to give you a point. I made that call based on technical analysis. There's pundits out there right now calling for 55. You guys are great. It's trading 57. Great call. Where were you at 103? Here's my point. OMNI gave us crude oil at 103. You know what else OMNI gave us this year? At the price of $17.90, OMNI gave us that the S&P would go all the way to 2130 this year. The high we ever seen at that point was 1810 in the world. The market's gotten all the way to 2080 so far, and there are weeks to go before the year ends to hit our 2130 target. So crude oil, great call from OMNI. Thank you, OMNI. S&P, fantastic call. I mean, hundreds and hundreds of points have happened since. Great call from OMNI. OMNI told us that gold at the price of $16.80 was topping, and it would break down to $11.40. The price of gold went down to just about $11.40. All right, so the long-term calls, OMNI seems to get correct. OMNI gave us the crude, OMNI gave us the gold, OMNI gave us the S&P. If you're going to take anyone's advice on where the markets are going next, take OMNI's advice. It seems to be pretty damn good. With that in mind, again, it is no secret that it's all about crude oil, right? So, being that we made these calls, I want you to know, watch who you take your advice from. Let's get moving. The IEA, the International Energy Watchdog, lowered its outlook for global oil demand for the fourth time in 5 months. What does that tell you? Here's what it tells me. It seems that now that the U.S. is starting to take control of a much larger portion of the world's crude oil market, we are getting real numbers on supply versus demand, on output versus what's needed. And instead of getting our stats from the Arabs, who we know love us so dearly, and used crude as a weapon to keep us hostage since the 70s, maybe even before that, now we're getting real statistics. How much crude's needed? How much crude can we make? And I'll tell you this much right now. What I'm seeing is this. Now that we're getting real numbers, the real numbers are showing us that crude belongs at a cheaper price. Now, how could crude at a cheaper price be anything bad? Here's the rest of what I've noticed from reading the papers, from doing my charts about the crude oil. The price of crude affects, as we know, every human on this planet, every country, every company, every economy, everything has to use crude or some form of energy at some point to move a product. So crude oil is a very dynamic vehicle in our economy, in the whole world's economy, right in your home when you go to the gas station, right here in your pocket, and the companies that you do business with. It's everybody, right? This huge dynamic vehicle called crude oil repriced itself dramatically, and thank God for the better. Now, repricing itself dramatically is a very good thing. It is a natural event that has taken place, and you should expect the same natural event to take place in all the other markets that are somehow connected to crude oil. And if you ask me, every market in the world is organically connected to crude oil. This is not something that we shouldn't have expected. The price of crude has repriced itself. The world has to reprice itself because everything has crude oil in it. Then you've got the dollar index, which hit this double top I've been showing you on charts, has so far not broken it, is starting to pull back a little bit, and the double top in crude oil or the hesitation, and the double top in dollar or the hesitation to get through it, plus the plunge in crude oil, and you've got a recipe for a fundamental argument for my technical picture to prove it out. And that is what I want to show you, that this is nothing more than a repricing of our markets and not a crash. Traders, if you like what you're about to see, come on down to livewithoscar.com. Come into my free trading room. With no further ado, let's go look at some charts. Traders, the crude oil. Massive double top. We started off with the crude oil a long time ago. From that double top, I made a dramatic call when we got back to about 103, and I said this would be the top. We would head down somewhere between 65 and 45. 65 is here. 45 doesn't even fit on the chart. It's way lower. This only goes down to 55. The call I've made was for lower than this. We made it straight down to this area, but remember, everything is affected by the price of crude. All the products, how much money you have to spend for Christmas this year, how much money you have left over to put in the bank, how much money the government has, the post office has more money because they're spending less. It just goes on and on and on. It helps everybody. So you had a major repricing of something that is organically connected to everything on this planet that we use as humans. So you got to expect other markets to reprice. Then you've got the dollar index. It has been going up for so long, no one knew what it meant to not go up. It hit something called the double top and so far has stopped. The double top is here, by the way, right? The market is here right now. Not up here anymore. It opened about here. So we're down here on a Sunday night. You can see that you're getting a little bit of a reaction. You're not going up as quickly as you were, and other markets are going nuts once again because there is a repricing of dollars and crude oil. So if you've had a dramatic repricing in dollars and a dramatic drop in the price of crude oil, you must expect these other markets to dramatically move as well, but that doesn't mean a crash is coming. Let's look. Traders, we've got a lot of work before we can call this a broken market. First of all, looks great to here, has a dip. Looks great to here, has a dip. So far, so good. It's getting closer to the very same trend line I showed you in the last two videos, and I said, what makes this dip any worse than this dip? It's not the beginning of the end. It is simply just another dip. Look. This dip was a buying opportunity. 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 This dip is going to be a what?
Buying opportunity.
Wouldn't you think so? So let's not count these markets out yet. In fact, I'm here to tell you, if we drop deep enough, Omni will turn this around and go long for us on Monday. Long if the market drops deep enough. We're not going long yet, but if we drop deep enough, we will end up long. I like these markets. That's your weekly, still looking solid in your NASDAQ. Let's move along. And if we crash, that's another story. We'll deal with it, but that's not what I see. Look at this wonderful channel. And once again, I don't want to waste your time, but was this dip a buy or sell opportunity? Buy opportunity. Next dip, a buy opportunity. So was this and this and this. Why should this be any different? I don't understand why all the previous dips, turned out to be opportunities, and this dip is a warning signal that the end is coming. Why is that, traders? Why does the world think that each one of these is the end of the economy coming? That's not what happened. Let's at least blow this out before we condemn our wonderful market, okay? Let's move forward. E-mini S&P. Remember this chart, and each chart I'm showing you, I've been showing you in the last 3 videos, so they've been with us for a good week or so. We had a hold here at the line, a hold, a hold, a hold, a hold, a hold, a hold, a breakthrough, but then it gets back above the line. Will it hold this line? I don't know, but it's getting closer. And if I had to gamble, 7 yes, 1 no, one of them's up in the air, we don't know yet, I'd have to go with the smart money on that, wouldn't you? So we have reason to not count this market out yet. Then you've got the Dow Jones Industrial Average, traders. Once again, look at this dip, becomes a buying opportunity, massive to the top of the channel. Dips, becomes a buying opportunity to the top of the channel. Dips, becomes a buying opportunity. Dips, becomes a buying opportunity. Dips, becomes a buying opportunity. It's dipping, it's getting back to this spot. Why are we all going to dirty our panties at this point, traders? What's wrong with you? Relax a little bit. Let this thing break key levels before you condemn the market. Big booming bull market does not deserve to be condemned because it's having a week down. Then we've got this. Traders, these charts look fantastic. Look at the German DAX. So you've got the German DAX. Is this a massive bull flag or some sort of pennant or something? Maybe, but what I want to show you is it's been going up for quite some time, and we had this double top. Remember the chart I showed you and I said we are observing? Is the German DAX having a double top? This bar wasn't there, right? All the way down here now. So we were up here, and I said, is this going to be a double top? Don't know yet. Let's observe. Since then, we've cracked, and so has the U.S. markets. So the double top is working. Where's it going to get down to? Maybe right here. It's only here. Maybe it'll get to here, like this hold, like all the other holds back here that I could show you. The only break was that one. You got to like what you're seeing on the weekly charts, traders. These are all weekly charts. From what I just showed you there, you've got to at least give this market a little bit of leeway and not condemn it until you start taking out key levels. Pull your own charts, do your own homework. I'll see you at livewithoscar.com. So, traders, you've seen the charts, and now you've got my technical argument for why I am telling you, at least for now, hold off. It is not a crash, and in fact, it is a mere repricing of our markets due to the shift in the price of crude oil and the dollar index stalling at the double top. That's what I'm looking for, traders. Look, a deep dip tomorrow, Monday. A deep enough dip could trigger an omni reverse to the long side, NASDAQ and S&P, so don't fall in love with this downside. Now, I'm not a crazy person. You see, as bullish as I've been, we immediately go short omni when the market starts going down. I am not going to stand here and tell you it can't top out. What I am here to tell you is until the market does top out, you're not supposed to call every dip the top. I mean, have we gone over this enough? Let it top. If it tops, we'll go short every single day until the cows come home. Let it top first. Don't let the pundits tell you the top is in. And like I said, traders, as I began this video, if you don't know somebody who's been as accurate as the Omni, Oscar's market navigational indicator, if you will, please follow the Omni. If you've got something better, go for it. I'm sure there's plenty out there. But if the calls that you're listening to come from an entity that cannot do what the Omni has done, don't listen to them. Come on down to livewithoscar.com and listen to the Omni. Traders, please subscribe to my videos at YouTube. This way you get a notification each and every time I put one of these out. And remember this, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders, and do not fall in love with the downside yet. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.